Hi, and welcome back to the Better Hard Money YouTube channel. I'm Rebecca with the Better Hard Money team. Today I'm going to define the differences between private hard money and conventional hard money. Let's first define what we mean by private hard money. We're talking about local professional hard money lenders, the local people that lend money based on the asset only, in most cases. Usually, they only lend money in a specific and small local radius from where they live or where they have an understanding of the market, unlike the conventional hard money lender who's lending nationwide in all major markets. You'll usually find private hard money lenders at local real estate investment clubs and from other local real estate investor referral sources. They don't usually advertise, it's mostly word of mouth. Real estate agents, attorneys, and title companies are all great sources for these referrals too. Their lending criteria tends to be a bit more flexible, and it does vary from deal to deal and from investor to investor. So for instance, we've had some lenders give us better terms with the more deals we brought them or based on the location of the property. Mostly it's based on the numbers shown for each respective deal though. They might be more flexible on the upfront points, interest rate, amount borrowed, type of collateral, and the term of loan. We have had some private hard money lenders be flexible on the percentage they'll let us borrow versus the value of the property. Some will vary on how they will let you pay the loan. Many will allow you to pay them in full when you sell your rehabbed property, while others will want you to at least pay interest through the duration of the loan. We've seen that these lenders are pretty aggressive with their penalty fees when you can't pay off the loan within the designated time. You have a better chance of them allowing to finance your rehab costs than you do with conventional hard money lenders. Some will joint venture with you and even let you have their money for longer than the norm of 3 to 9 months. Conventional hard money lenders are large organizations that will do hard money loans nationwide and in most major markets, or they will lend in quite a few major markets if not nationwide. Their loan terms are very strict and normally vary little from market to market. The asset type that they'll lend on will be strict too, usually very low risk properties like single family residence or small multi-units, or they might be targeting a specific niche property like hotels or mobile home parks. The problem is that if the project you bring them doesn't fit in their box, you won't get any funding. The process you have to go through with them to borrow is really long and it requires a lot of information and paperwork. Most won't finance rehab costs and they'll base their amount that they'll let you borrow on percent of purchase price instead of loan to value. So you'll almost always have to bring money to the deal to close because they won't finance the whole purchase and closing amount. They'll typically charge 2 to 10 points up front and 12 to 22% interest. Normal terms will be 3, 6, or 9 months. They'll want to automate the process as much as possible, and they won't give you as much personal attention like a private hard money lender would. So that's a little bit about the differences between private hard money lenders and conventional hard money lenders. As always, make sure you complete your due diligence when working with any type of lender. Leave your questions and comments below. Make sure you visit us at betterhardmoney.com by either clicking on the box or following the link down in the description below. I'm Rebecca with betterhardmoney.com. Happy investing!